What is supply and demand? Demand is a zone from which the price made a big move up, while supply zones caused a big push down. To find these zones, you look for big formations of same color candles which broke structure, creating new highs or lows. Price usually reverses when coming close to these zones of supply and demand, so they are great for limit orders. You should trade with the trend. If price is making higher highs, only look to enter at the demand zones and use supply zones as your take profit. And the opposite way, when in a downtrend price is making lower highs, enter only at supply and take profit at the next demand zone. If you can't see the trend, go 4 times higher time frame and use the super trend indicator. Trade demand zones if it's green and supply zones if it's red. Zones that have an imbalance close to a supply or demand zone are more likely to be targeted by the price to balance the market. Subscribe to learn about mitigation, breaker and order blocks in the next video. Supply and demand secrets. Doji candles represent pauses in the market before a big push. They can be used as zones of supply and demand. If broken with a strong move, an ignored demand will turn into supply on a lower time frame. Supply or demand zones in a liquidity grab are likely to be targeted and cause strong moves. Subscribe for more trading tips. Supply and demand secrets. Use the profile tool to find the most likely point to which price might retrace at the point of control. If price ignores the trend opposing zone, that might be an early signal for an upcoming reversal. The best supply and demand zones are found in between the 718 and 886 Fibonacci levels. Check on multiple time frames if your supply or demand zone is visible there as well. The more people see it, the stronger the reaction. Combine supply and demand with trend lines to get double confirmation entries. Like and subscribe for more.